Good morning. This is the weekend update for buy sell short for Saturday, February 9th. Starting off with the Dow 15-minute chart. This past week, a lot of chop in the market as we've fallen into a consolidation pattern, a little bit of a range between 13,800 and 14K. And early stages of this consolidation, and typically when you see this happen, especially after the kind of rally that we've seen in the market over the last several weeks, you get a lot of the top callers coming out, a lot of the shorts prematurely shorting, and that tends to be a recipe for further upside once everyone has gotten lulled into this little bit of a range. And first week, really, in the last month and a half that we've seen any sort of volatility, and you can really see it here on the 15-minute chart. Big pops, consolidation. Big drops, consolidation. Big pops, consolidation. Big drop, essentially every other day this week. Now, the internals in the market are still bullish. On Friday, the advanced decline was very, very healthy. But, you know, people are just assuming, given the size of the rally that we've had, it's not going to take much to take us down. And we are overbought. But I've said many, many times, overbought can remain overbought for a very long time and break the back of the shorts. Also recall, we really have not seen the kind of mania that you would see at a top. Average guy is still sitting on the sidelines. There is still a ton of cash sitting on the sidelines, and tops are made on high volume and high euphoria. If you're a trader, have you been standing essentially next to the water cooler, hearing people talk about getting long the market, etc.? Unlikely, and that is usually a pretty good indication. We had it on all the past topsinthemarket.com, real estate crash, etc., etc., and we're really not seeing that yet. Looking at the daily chart, you can see a better picture of this little consolidation that is in place right now. All the moving averages are curling up. Now, if we were to see a pullback, we could easily pull back to the 13,500 area where the 50-day moving average is, and still be fine. A retrace like that over a course of a couple of days would really not mean a whole lot. And, if we did get a pullback to this zone, that would be the area where you would see how real this market is and how greedy or left behind the money on the sidelines is. Any sort of retrace like this, and you'll see money rush into stocks, in my opinion. Quick look at the Russell. You can see it's slowly trudging higher, which is great. One thing I do want to bring up is the bullish NASDAQ Composite Bullish Percent Index. And essentially what this is an indicator of overbought and oversold. Now, we keep an eye on this with an eye. It's kind of a medium-term outlook play. Let me just show you. Let me pull up a 10-year chart of this. We've played this many times in the past, especially on longer period views, but check this out. Usually when we get up to the 70s, as you can see here, it is a danger zone. It is a be careful, watch out for a possible market retrace. And of course, when it gets down in the basement, as it did back in 2008, it is a major buy signal. And we got, I believe, 1,000-point bounce out of this one back there in 2008, 2009. But anyway, we're not at that level yet, but we need to keep an eye on it. And let's just leave it at that. Anyway, let's jump into some stock plays. New play on Friday, CBRX, Columbia Laboratories, women's health stock back in November. Watson Pharmaceuticals. These guys have a couple of drugs that they developed that are on the market that they sold the rights to Watson Pharmaceutical. They currently manufacture those drugs for Watson, which is why these guys have $5 million or so revenue each quarter. They are due milestone payments, and one of their drugs, the FDA, did not accept the new drug application. That was the reason for the sell-off. So here we have a nice 2+ month base, and on Friday we finally started to break out of that little triangle formation. First target is 75 cents. We've got RSI ticking up through 50, stochastics looking strong, positive MACD cross coming. These guys are sitting on $25 million in cash. They also stated in their last conference call that thanks to all the cost cutting that they did last year, they are cash flow positive / neutral. Very, very nice. Any sort of positive news on their drug will set this one free. And actually, we've been seeing small little biotech stocks, one or two of them go big each week. And this one is shaping up very, very nicely for a breakout move in the upcoming week. On Friday, we had TZYM, our little patient bottom bio play, get some nice news. They finally announced that they are officially up for sale. Nice little pop on this one on heavy volume. 68 cents is the breakout with a move possibly up to the 80-90 cent area. RSI is actually about to break 50 for the first time since their sell-off back in November. We saw a positive ADX cross on Friday. On balance volume looks very, very strong, and stochastics look very, very nice. So let's see if we can get some upside follow-through on this one this week over 65, but 68 cents really is the key watch area on this, and this is where you'll see a lot of volume come in if this does get breached in the upcoming week. PTN has been consolidating since we jumped into this one last week or a week ago, right under the 50-day moving average and 200-day moving average. They report earnings this upcoming week, Wednesday, I believe. On Friday, big volume explosion on that breakthrough resistance. Very nice close on it. A move through 72 cents on Monday, and we could quickly see a move up here to the 80, 85, 90 cent area. All the indicators look very, very strong on this chart. They are trading under cash. You know how I love biotechs that trade under cash. RSI, nice move up through 50. Unbalanced volume has gone vertical. This is what we like to see in breakout charts. And, you know, been a little bit of a patient play, but already it's up 35% from our bottom call a week or so ago and looking very, very nice. PEIX, the biofuels woke up on Friday, and actually let me start off with BIOF. This one woke up nicely on Friday. We jumped into it in the chat room, 450 to 455. Our target was 5 to 507, and then a move to 550, and the stock went boom on very, very nice volume for this issue. Closed right underneath the 200-day moving average. A breakthrough 510 on Monday could bring the chasers into this stock, and you could quickly see a move up to the 550 plus area. But even this chart, as I mentioned in the room, booked 90% of profits, playing with the house money right now. The chart I really like going into this week is PEIX. This one had a very nice early week, well, popped last week into Friday, gapped on Monday, and has been consolidating over the last couple of days right underneath the 200-day moving average. This chart looks a lot like it did back in September, where it was coiling right underneath the same level, and then it exploded up to the 80 cent level. We've got a nice little flag formation here. I think this one's going to gap and run on Monday, and they are going to chase it like they're going to chase it big time, I think, in the upcoming week over that 200-day moving average. It tried in pre-market a couple of days ago. It's going to do it, I believe, Monday and Tuesday, and this one could be off for a very nice multi-day run. Volume has been extremely strong on this one. We are about to break a lot of resistance on the moving average or on the technicals. On-balance volume looks great. I think it's going to be a very good week for biofuels. And SYNM, which has been lagging the big moves in the other ones, but has been stair-stepping higher. We've played a lot of stocks like this over the last year that have done very, very well. The stair-stepper move where you see a nice high-volume spike, slow volume walk down, spike, walk down, spike. We're about to enter another spike zone, and after hours on Friday, they reported good news that they are again suing Neste Oil for patent infringement. You know, I think it's only a matter of time before those guys come in and buy out SYNM. This company has been really lacking on giving us any sort of meat press releases, and they're starting to release a few press releases. They won a court victory last week. They're suing these guys again. This one should make a move on the 200-day moving average this week. 20% upside is what we're looking for this week, up to the 65 cent area. We've got some nice uptrends in this stock on all the moving on balance volume, stochastics, ADX, We got a nice bounce off the 50-day moving average and this uptrend line. RSI, nice bounce. Looking very, very good going into this week. Big winner for us. Another 50% plus winner for us. WYY from essentially 35, 36 to 40. You know, this is the area where we were buying. This week hit 65 cents. What is that? 60%, 75% move over the last couple of weeks. Could see a little bit of a pullback back to these moving averages around 50, 52 cents is where I would look to accumulate some of those shares if you took some profits off the table here in the last couple of days. This is the zone we'd be looking to pick those shares back up and looking very, very nice going into this week. COOL, nice pop on Friday. Retrace into the close. Was actually looking to close at 65, 60 cents, and for the second day in the row, got one of those bullcrap paint the close last tick 2 cents below trades. Closed at 64 cents, I believe. 71 to 80 plus is what we're looking for in this upcoming week. We got RSI curling up through 30. Finally got that positive MACD cross. Stochastics up through 20. These are things that I like to see on bottom charts, and we have all three in place right now with a pair of cool romping, and that would be glue romping over the last couple of days. So very, very good for the pair going into this upcoming week. ISR. We got a nice pop on this one early in the week, got as high as 85 cents. And over the last couple of days on lower volume, it's kind of come back a little bit. Still holding above support. Next break, as I mentioned in the video on Thursday, over 80 cents, I think, will set this one free from this little triangle breakout. So let's see what happens over the next couple of days. What's been happening a lot lately is we're seeing a lot of dip and rips. They pop, they go through breakout, they're ready to go, and then we get no volume walk downs to scare everyone out. And then they rocket higher. We've been seeing that over and over and over again in a lot of the stocks we've been playing. So I'm thinking the similar thing is happening on this stock as well. Last but not least, quick mention on RNN. Big pop on Monday. Huge volume. Remember I was talking about this one last Saturday in the video. We had this nice little cup and handle formation. I said the stock was coiled for a breakout. Monday morning we got monster volume. Highest volume in months. Traded as high as 39 cents. And since then, on Tuesday, down 2 cents each day on lower and lower volume. Now, typically on an accumulation chart, you see heavy volume pops. Low volume, well, lower volume retraces. Back to support for an inevitable pop higher. You can see that in on-bounce volume. Huge spike on this one, and then the retrace on the lower volume. Let's see if this one goes this week. I would be picking shares up. I mean, the downside risk on these guys, I believe, is 30 cents. So 30 to 33 cents, I believe, is a very nice accumulation point on this one for at least a 25 to 30% upside move in the coming days. So that's it for the video. We got a lot of very active stocks going into this week. Some very, very nice setups. Make sure to check your inboxes. We are putting a new password on the chat room, so check it. Make sure you can get in by tomorrow. I don't want to be getting 50 emails 2 minutes before the market opens on Monday saying, hey, what's the password? So check your emails. Have a great weekend, and see you in the chat room on Monday. Bye.